My name is Avik Gupta. I'm a senior manager with NSE Academy, and it's indeed a pleasure to welcome all of you to this webinar on when is the best time to invest in the stock market. So, before we start off with the webinar as when is the best time you can think of investing in stock market and mutual fund, we'll just set the background, and the background is. NSE Academy, which is a wholly owned subsidiary of National Stock Exchange, and Tech Mahindra Education Lanes had launched a course together called Certified Equity Market Analyst CIMA and Advanced CIMA. And it's a program which has been built taking the best topics from the financial markets together. So here you learn about investing in stock markets, in mutual funds, in various other markets like commodity currency market, both how to invest, how to trade, how you can manage your money better. So all these things are built in this program. And just to give you a small introduction, NSE Academy is the wholly owned subsidiary of National Stock Exchange of India. NSE is the largest stock exchange of our country, and NSE Academy has been offering programs to various professionals, and till now more than 41.8 lakh professionals and individuals has been trained by NSE Academy through its various initiatives. So talking about this program, first, since it's a program on investing and trading, why do you think people invest in stock markets and mutual funds? Why do you invest? Because you might be hearing of late during the last few years, people are investing in mutual funds in a big way, in stock market. They are doing an SIP. As per the Association of Mutual Funds, every month there are more than 10 lakh SIP accounts which are getting added. Just to give you a small brief what SIP is systematic investment plan. Every month, a part of your salary, say 5,000 or 10,000 or 15,000, the amount doesn't matter, is invested in the mutual funds on a fixed basis. So every month, that part of your salary gets deducted and it gets invested in the mutual funds. So in a huge way, SIP is happening in our country for the last 2-3 years. I will show you the data. So why do you think over the last few years people are investing in stock market and mutual funds in such a big way? I will tell you why and give you the reasons. First, the financial markets in India is expanding at a very, very rapid pace. If you see, during the last 5 years, Nifty, which is the benchmark of National Stock Exchange, has given a return of 112% over the last 5 years. So it has almost doubled. And the Indian mutual funds have currently around 2.33 crores SIP accounts where investors are regularly investing in mutual fund schemes. If you see Indian companies like Reliance, TCS, they have all crossed market cap of 7.5 lakh crores. So they have grown as a very big company over the years. Even the AMFI data, which is the Association of Mutual Funds in India, shows that the mutual fund industry has added around 10 lakhs SIP accounts each month on an average during the financial year 2018-19. Even the foreign institutional investors, FIIs, who are registered outside India, they have been the net buyers in the Indian stock market during the last few years. So all things taken together, the stock markets and mutual funds have given a very, very good return during this phase, much higher than what of FD return, what you get from a bank or from the bond market. Just to share some statistics with you, this is a statistics which we derived from the AMFI website. And if you see the SIP amount which got collected in the last 3 years, as I told you, SIP is a fixed amount which gets deducted from your salary usually. It might be 5,000, 10,000, 15,000, and it gets invested in the mutual fund scheme. So as per the data of AMFI, during 2016-17, there used to be around 3,500 crores coming in the mutual fund schemes through SIPs. That figure jumped to around 5,000 crores in July 2017-18, and it again jumped to 7,500 crores in July 2018-19. So actually you can understand there's a huge way people are investing in the financial markets through mutual fund and also directly to the stock market. This is the phenomenal growth in the in SIP in mutual funds during the last 3 years. So when is the best time to invest in the stock market? When you should invest in the stock market and mutual funds? Do you invest now or you wait for another few years? This is a quote from a very famous individual called Mr. Warren Buffett, who is currently the 3rd richest person of the world as per statistics. And he said, "I made my first investment at the age of 11 and I was wasting my life up until then." So I guess all of us here, we are definitely above the age of 11. And if we have not invested till now, we are already late. So let's talk about the program in short. This program, as I told you, is Certified Equity Market Analyst SEMA and Advanced SEMA program. This is the 4th year of this course which we are going to run through. We launched it in 2015 and this is the 4th batch. And during the last few years, there's a great number of participants who have passed the program, and we have received very good feedback. That is why this is such an old program, and still we are continuing it in revamping it. And we are very hopeful that the current batch is going to be launched soon. We'll also have a similar feedback about the program. So why SEMA? What is the advantage of this program for all of us who are working professionals or those who are students here? As I told you, in this program we have tried to bring the best topics from the financial markets together. So this program serves 2 purposes. A, it teaches you how you can invest and trade in the financial markets and mutual funds. So once you complete the program, you are expected to have the proficiency of investing and trading of your own in stocks as well as mutual funds. That is how the program is going to prepare you. And B, if you want to get into financial markets, this program will definitely make you employment ready as well. So it serves both purposes. A, if you want to trade and invest of your own, and B, if you want to change your domain or if you want to get an employment in financial markets, this program is going to help you in that as well. So SEMA is basically a financial market analysis program, and here we are not only going to teach you how to trade and invest in stocks and mutual funds. We are also going to teach you how you can invest in commodity market like in gold, silver, and other metals. In currency market, we all know that rupee is depreciating, dollar is going up. So how you can take advantage of this kind of currency fluctuations, which is witnessed now. It also tells you how to analyze the markets fundamentally as well as technically. You can analyze the financial markets in 2 large ways, fundamentally as well as technically. So both ways will be taught to you. You can demystify mutual funds and learn the technique of investing in mutual funds, as well as you can learn about financial planning, tax planning, the investment styles of the financial gurus, etc. So the speciality of this program is it is practical oriented. It is not a theoretical program. So it's a good blend of practical knowledge as well as theoretical knowledge we have brought together. So you will be practically trained on how to analyze the financial markets. There would be comprehensive knowledge about mutual funds. You will be told how you can trade in financial market softwares. There would be quite a we will be showing you quite a few softwares where you can use it while you're trading and investing. There would be mock trading, so you will be able to trade in a virtual environment and get yourself used to trading in the real world. Of course, there are passing marks and attendance criteria as there are with any programs. This is the program content for SEMA. If you see, we are covering capital markets, fundamental analysis, technical analysis, futures and options, commodity market, currency market, practical training on stock market softwares, mutual fund, how to efficiently invest in mutual funds. Advanced SEMA has advanced topics like advanced technical trading strategies, advanced strategies on options, commodity market, currency. Advanced SEMA also has a very important component, which is financial planning, because unless you have a very robust financial plan, the knowledge which you have of investing is somewhat not complete. So you need to have a balance of how much to invest in your bank FDs, how much in stock market, how much in mutual fund, how much in commodity market, etc., etc. And also tax planning for salaried person and investment style of financial gurus, which will also be covered. There are quite a few questions which we are getting, so we will be answering the questions once this PPT is over. So we will definitely come back and reply back to your questions. Talking about the faculties, another feature of this program is we have tried to bring the best financial market experts in this program as the faculties. So starting off with Mr. Abhijeet Paul, who is sitting next to me. Abhijeet has around more than 14 years of experience in financial markets, and in his last avatar, he was the Assistant Vice President at Brick Securities, heading the Institutional Research Desk. Now, those of you who watch business channels like CNBC, Zee Business, he is a regular person there who comes in these business channels, so you might have seen him before. Our next faculty is Mr. Malhar Majumdar, who is a CA and a cost accountant and a CFA and IFRS as well. He has trained more than 15,000 professionals of PSU banks, foreign banks, etc. He was also the ex-head of knowledge management with Financial Planning Standard Boards of India. He is a regular columnist with Economic Times, Business Standard. So if you go through those newspapers, chances are you have come across his articles before. And our third faculty is Mr. Abhishek Dubey, who has been heading the currency and commodity segment of a leading broking house as the Associate Vice President. So he is going to cover the currency and commodity market there in this program because he has a huge expertise in this area. So that's about the program in brief. So I will just hand over the proceeding to Mr. Abhijeet Paul, our lead trainer in this program, who is definitely going to discuss and tell you when is the best time to invest in the stock market and mutual funds.
All right. Hi, everyone. Yeah. Quickly, let's do an audio test. You should be able to hear me clean. Everyone, good to see that over 60 people have joined us this afternoon. Thank you. So audio seems to be clear. No issues with that. I can just shift this laptop so that I can see your questions here.
Yeah.
Okay. Thank you, Avik, for giving a little bit of brief about myself. My name is Abhijeet, as Avik mentioned some time back. I happen to be the lead faculty with CIMA and Advanced CIMA. We designed this program in such a manner so that it is implementable, practical, so that you can take your own call. Now, during the period when Avik was briefing you about the course, he did mention about a person called Warren Buffett, and most of us know about him, right? We came to know about him after he crossed the age of 50, actually, because earlier, from the age of 11, what he did was he implemented whatever he believed in, that is, buying into companies with great potential value. Now, one of his famous quotes, now he's filled the internet, and there are a lot of books which are full of his quotes, and one quote I'll like to share with you is, he said that never depend on a single source of income, make investments to create a second source. Let me break this down a little bit easier for you by saying an active source of income and a passive source of income. This you would connect easily, immediately, if you have read something like a Rich Dad, Poor Dad from Robert Kiyosaki. Now, what he says is that you need at least two different sources of income. One is an active. Now, you should be probably part of a company. You probably go out and work your hours out, and the man hours that you work out, you get certain amount of pay, which we call end of the month salary. However, this is your active source of income. What you parallelly need to prosper, to take care of what we call as inflation, is a passive source of income. The passive source of income is you're not putting in your man hours directly into it. Somewhere you're essentially sowing a seed, and that seed is slowly but surely taking a shape of a big tree, and sooner or later you're going to enjoy the fruit. So you should definitely always think from a point of having an active income as well as a passive income. Now, our educational system is such that we always gun to gain certificates so that we get a good job. And so our objective from a very tender age is to have an active source of income, that is to have a job, a job, a job. But my experience is that after someone crosses, in India at least, that after someone crosses the age of 30 or 35, will he or she start to think about, okay, I should have a passive source of income as well. I think that is a little late, and that's why there are programs like SEMA, which definitely allows you to take your own call. Now, the theme of our speech is, when is the right time to invest in the stock market, or what is the right time to invest? There are two answers to it. If you ask me, the first answer and the very honest answer, both are honest answers, but the first answer I would give you is now. Okay, you don't wait for all the 6 signals on the street to go green so that you can take out your new car out. If you think that you have some disposable income, now disposable income means whatever you've gained, whatever you've earned, you've spent on necessities, and whatever is left, that is your disposable income. If you think that you have some disposable income which is sitting in your bank account and just giving you 4 to 6%, if you put into an FD, it is probably giving you 7.25%. But then you have time behind you, that is your age is less, then you should take a little bit more risk. So you should invest. So you need to know where to invest. The time is now, because if you wait, that wait can extend further. Now, a more refined answer to the question is, when is the right time to answer? When is the right time to invest in the stock market? Is we can time it. Allow me to show you the behavior of our Indian equity stock market, which is with the help of Nifty, which is the barometer of the Indian economy. And let me show you how it had panned out, how it had evolved, how it had shaped up. Now this chart, this is a 2-dimensional chart. This is a part of technical analysis, which is again a part of your SEMA program. We can see that from 1994 to almost 2003, we were essentially range bound. This was right after the reforms in 1991. So our economy was taking its own sweet time to shape up. But then when we decided to pick up, this was the last bull market from 2003 to 2008. We went through a very nasty bear market. The entire global market went through this from 2008 to March 2009. But slowly and steadily, we know that amongst the emerging markets, we are one of the best compared to value, compared to price, compared to momentum as well. So right now, as we see, this is the monthly chart, means that this right now, the last right hand corner, the red thing, this is the month of September. This was how August had panned out. So July and August have been exceptionally good months. This has been the growth of Nifty, and we are in an emphatic bull market across all time frames. Going back to that question, when is the right time to invest? You would definitely say that this is the right time to invest. This is the right time to invest. This is also the right time to invest, and this is definitely not the right time to invest because the market is at a top. But you never know. If I just drag you back few months, you would say the same thing looking at this. This is the market top, but then it keeps on going up. Now, the point of knowledge over here comes because we need to know, we need to accept that investment is more of a behavior thing rather than a thing which excites you, or let's say the speculator in you gets excited. Let's say you find investing or trading in the stock market very close to like a gamble. No, it's not a roller coaster ride where you're going to enjoy. Investing is more like a behavioral aspect. It's more like an habit. Okay, so the right time is now because we are growing, because we will grow, and there's no doubt about it. Yes, when you have to reach from point A to point B, there will be retracements. Yes, there will be temporary halts. Yes, there will be a little bit of corrections, and these corrections are opportunities, because equity as an asset class is the best asset class when you compare returns with any of them. If you look at bank accounts, if you look at FDs, RDs, if you look at gold and real estate and bonds, and when you compare that with equity, you find that equity beats them hands down. Any day, any market, any country, hands down by a significant margin. Just to give you a perspective, over a period of around 18 to 20 years, any equity market will give you on a CAGR 15 to 18% year after year. There will be negative years, there will be super bumper years, but if you average it out, you're looking at around 15 to 18% CAGR, which is far more than what your FD will fetch you, right? So there's no doubt equity is an important asset class. There's no doubt that if you're young and you're growing and you are evolving as an employee, if you're evolving as a person who is a resident of India and wants to make use opportunity of the growth that we are seeing, then you need to invest. And rightly, Abhig put that in terms of the numbers which you saw in SIPs. They've just blown out. There are few reasons behind that. Demonetization definitely was one of the big triggers behind it. But the fact is, people left to you and right to you are investing. I'll just give you one of my simple example. I tend to work out, and after days of trade, I generally like to go to the gym. And I have a trainer, and he's just a trainer, right? Just like a typical hunk. He doesn't understand anything about stock market. But over the last a month, he's been started asking me about Tata Steel. He's asking me about SIP, and trust me, I've managed to start 2 SIPs in his and his wife's name. He started one with, I think, SBI and with HDFC. So the consciousness and the awareness is there. People who would never invest in the stock market, people who would say that stock market to jua hai, it's a gamble, stay away from it. They have started to accept it, that small but surely in some amount one should invest in the market. Now, before I take up your questions, the point that I want to raise here is how do you do it, right? So over the last 14-15 years, I've been in the field. I am a trainer. I do trade the stock market. I do invest. I help people to invest and trade also. And our endeavor with programs like SEMA is you should be the one who should be able to take your call. Now, I have many friends from my school days who are part of big IT companies like IBM and Tech Mahindra also, especially IBM. And they tend to tell me that actually they don't know anything about the financial market. And they tend to tell me that when is the right time to invest. And all that I tell them is start an SIP, invest in small parts, but make it a habit, make it a recurring part. And when the market turns, let's say the market is down 10, 12, 15, 20%, they tend to get back to me and ask me that, oh, my SIP, my mutual fund holding has come down, or my stocks have come down, what should I do now, etc., etc., because I see distinctly lack of knowledge about the field. They are very smart people. Don't get me wrong, they are extremely smart people, they are extremely talented person, but when it comes to managing money, when it comes to financial markets and stock markets, they tend to lack the knowledge. And I don't blame them, because they have put in their entire career into a specific specialized field. They couldn't manage to get the time and know or get aware of the financial market. That's why programs like SEMA comes into the picture. It's an online program. You can join it at your weekend. It's shared by people like me who's been into the thick of things for the last 10, 15, 20 years. It's a holistic program where from the basics to a little bit of to a lot of advanced is also covered, so that if tomorrow you find that there is 10,000 or 1 lakh rupees lying idle in your bank account, and tomorrow you decide that I don't want this money to lie down in my bank account, I want to put it in the market, where should I go? You should be able to take that call. Now, irrespective of the fact whether that call of yours yields you a lot of return, mediocre return, negative return, does not matter. What matters is, do we have the clarity with which we are handling our money or not. Leaving it to a third party, letting the driver, the chauffeur drive the car is fine. What you're doing is putting in your money in the mutual funds, and one should do that. But then parallelly, considering the kind of person that you are, you should educate yourself, bring yourself to such a stage where you can take your own decisions. That is essentially the objective of SEMA. That is the objective of NSE Academy with Tech Mahindra and Education Lanes. And that's why we have created a program like SEMA. Right? I will quickly look into your doubts and questions if you have put in few. How much capital should one newcomer start? Rishikesh, I can tell you a story. So Rishikesh is asking us a question that how much capital one should have as a newcomer. Now, I'll just tell you a quick story. When I was in Bombay giving trades to clients, and it was a bull market between the zone of 2003 and 2007, I figured out that I'm quite easily making the rich richer. And end of the month, I just used to get my salary, which is not close to the money that I used to make my clients. So I used to tell myself every day when I used to step inside my office that what am I doing? If I'm this good and I can make my rich clients richer and they are making far more money than what my salary is, why am I doing it that for them? I should do it for myself. So I did my weirdo kind of a calculation and I came to a point that, okay, I need 33 lakhs, and if I get 33 lakhs, I'm going to say bye-bye to everyone, everywhere. I'm going to sit in my home in my shorts and I'm going to trade and become a trader. It was a very not so sensible thing to do. It was not the right kind of calculation. With the passage of time, I realized that there is no such amount. You can start with as small as 1,000 rupees. You can start as small as 500 rupees. And exactly that's what I did. When I realized, and it kind of opened my eyes and opened my mind and realized, okay, I cannot wait for the money to come to me. I cannot wait for me to save that money and then I'll become a trader. No, if whatever I have, start right now. So I started with 1,500 rupees. I bought some few stocks for 1,500 rupees and 1,500 rupees and 15,000 rupees and 1.5 lakh rupees. That's how it grows. So Rishikesh, the answer is start no matter how small it is. Because when you start, your mind is connected to the money that you have invested in. It can be 1,500, it can be 15,000. But once your mind is connected to your money, you would like to know, you would like to track the markets, you would like to learn. So please start, don't wait. Should newcomers trade in intraday or long term? So Rishikesh, newcomers, when you say, I can take an assumption that you're talking about amateur traders, I would suggest it should always be long term. Simple answer, why not intraday? Because in intraday, let me show you, because the chart is open in front of you. And I'll just take 1 minute of your time and load some intraday data. When you use the term like intraday, you need to understand what happens during intraday. Okay. So what I'm going to do is give you a perspective of any stock in a slightly long-term picture and a slightly compared to that an intraday picture. All right. So let me take up something like, let's say, Reliance Industries, or let me take up something like what happened today. I will not have that. Okay, let me take Reliance Industries. All right. So this is the long-term picture of Reliance Industries and how the stock has been slowly but surely in an uptrend going up. The moment you take up any of this price information and move it into an intraday, this is 1 day's information. I don't know if you can see this. Let me make it a 3-minute chart. Yes. Starting from this end till the last end over here, right? This is Reliance Industries today's trade. So you can see it fell, it rose, it fell quite sharply, then it kind of stagnated. If you see the same thing for Axis Bank, you'll be surprised to see it opened huge up. It was a bumper opening today. And similarly, towards the afternoon post lunch, it gave back everything. And then it kind of closed flat. What I'm trying to show you is when you drill down to lower time frames and talk about intraday, the gyrations, the oscillations, the volatility, the choppiness is very, very high. At this point, you were feeling I'm the king of the Now this is what happens in intraday. So when you're starting off, let's say you don't know how to ride a bicycle and you start off riding a bicycle. On the first day, you fall 3 times. The next day, you fall 2 times. The third day, you fall 2, 3 more times. And this way, for the first 5, 10 days, you keep on falling, falling, and falling every time. By the time you reach the second week, you are no more interested to ride the bicycle because you are not being able to balance and ride it for 100 feet, but you have fallen 100 times. Will you be interested? No. Similarly, if you start off at the initial stage, if you start off with intraday, you will be seeing frequently more losses. And if you take up more losses frequently at the beginning, your interest of learning the subject, knowing about the subject will come down. So answer is please start with long term.
So do we start off with the first questions first, or there's a lot of questions coming?
Okay, so I'll take up the questions. Yeah, we can.
Basis.
Yeah, fee for basis is fine. First in, first out. So. I'm just going through the questions one after the other. I'll request everyone to hold your questions right now because let me take care of the questions that you have mentioned so far. Short term and long term, 2 minute discussion. We have covered these.
Which is good intraday, short term?
We answered right now this. Should newcomers, we answered this one right now.
Okay.
All right.
How much time to invest in paper trading or real trading?
All right, Dipendra has got a good question. He's asking that how much time should we put in real trading and paper trading? Trust me, Dipendra, I've been training for almost training people to trade for almost a dozen years now. We all make money when we do paper trades, hands down. I can guarantee that from tomorrow, if you start doing paper trades, by the end of the month, you will make money. And with the same confidence, guarantee I can tell you, from the next day when you start putting in real money, you will start losing. How does this happen? Why does this happen? It's more about psychology. It's more about emotions when your money comes into the picture. But having said all of this, paper trades is important at the initial stage. Why? Because I will show you certain techniques in which you will buy and sell stocks. If you do it for a certain number of time in a paper, it's like in the cricket we do shadow practice. Like you play in the nets. Why do you play and you bat and you ball at the net? It's exactly like that. Because when you go to the main event, you have more or less habituated yourselves with the strokes and with the bowling and etc. It's the same way. So if you're completely new and completely amateur and just started it, it's always good that you do a bit of shadow practice, and it's important that you do paper trades. There's no fixed rule that you should do it for a month or a quarter or a year. It completely depends on how confident and comfortable you become after that period. One can become confident and comfortable in a week. That can be overconfidence. And the other person can take a quarter's time. So it completely depends, but it is necessary. Do you have any intraday course? Mohana Krishnan, if I have pronounced your name rightly. So intraday trading is just a small part, or intraday strategies or trading strategies is just a small part of the whole thing, right? There are trading strategies covered in our program, and those trading strategies can be implemented in intraday also.
Suman is sending the course.
Okay, Suman is asking to send the course brochure and other details soon. Definitely, Suman, I'll request you to share your email ID with us, and we will definitely get back to you with the course brochure. So Rohit is asking, when he's talking about SIP, it's into direct equity or through mutual fund. So SIP means systematic investment planning. So in a systematic manner, you are planning your investments. As I said, it's more like a behavioral thing. So I decide that the 5th of every month, I should put in 5,000 rupees with a mutual fund. I decide that the 5th of every month, I should put in 5,000 rupees in an FD or a recurring deposit, RD. These are all SIPs because these are all systematic. You are investing and you have planned it. So SIP need not always be mutual funds, but SIP is a way of investing. It's a philosophy of investing, right? So you can do it in direct equity also. If you love Tech Mahindra as a stock, if you love Reliance as a company, if you love Infosys, if you like ITC, If you're a smoker, you should definitely do an SIP in ITC, because it's due to your smoking that the revenues of ITC is going up. It will become a good natural hedge. So yes, you can definitely do an SIP in good stocks, but if you do SIP in stocks, make sure they are quality blue chip out of the Nifty 50 stocks. Venkatesh has got a wide, it's got a long question. Hi Paul, when I should start to sell my bought shares, means the shares that you have in your portfolio. With my understanding, if my returns are between 7 to 15 of the invested amount, then I have to plan to sell the shares. Is this correct? Or no, this is not correct, Venkatesh, because this is one of your approaches. You can have it, but you never know whether that holding of yours, which is giving you 10%, can tomorrow give you 30%. So there are ways in which you can trail your gains. You can protect your profits. You can, if you use stop losses, you can trail your stop losses. So having a rigid number like 7 to 15%, I'm out. Is it the right way? It's just a way. There's no right or wrong in it, but there are better ways. There are much better ways.
Deepak wants to be an option writer, so please guide me.
Right, Deepak wants to be an option writer. So a lot of institutional traders and proprietary trading desks are at the other side of the option. That is, they are option writers. They sell options. To sell options, you need to know what options are really, really well. From a structural point of view, to write options, you need to have margins. You have to be well funded so that you can keep on writing options. There are Greeks like the delta, gamma, theta, vega, rho, and the theta plays a very important support for people who write options, because it's the time decay. Now these are complex terms about the options market which you need to understand. But remember one thing, timing in the options market is epitome. It's extremely important. And for that, I've seen that many good option traders are also good technical traders, because technical analysis, the charts which I've shown you in front of you, helps you to time the market. The fundamentals tell you which are the good companies, but good companies also go up and come down. You would like to buy them when they're coming down, they're getting relatively cheaper. So technicals helps you in timing, fundamentals helps you in what to buy, technical tells you in when to buy. Options is definitely a very non-linear game which can give you multifold returns, but you need to know this really well before you get into it.
Vikas, please tell me about swing trading.
Vikas, swing trading, you've hit the nail right, because I am a swing trader. So let me quickly show you Axis Bank. Look at this. This is the chart of Axis Bank. All right. Axis Bank was stuck within a range for a long period of time during this time, and it was facing some kind of resistance close to that 560 mark. What we have here is a breakout. We call it a breakout. Breakout is when a market or a stock price, when it's stuck within a range, it moves outside the range. It's a breakout, trend following structure. Okay. These are breakout traders. If they buy on a high momentum, breakout traders buy high with the anticipation of selling higher. Swing traders don't participate here. They do not participate here at all. Swing traders participate down here. What they like to do is, I'm not going to buy high and sell higher. I'm going to wait for a trending market, a defined trending market, to ease off. The main trend is up. Now the short-term trend is down, and I would like to buy here with the next move up. These are swing traders. The same theory, the same philosophy can be implemented in a falling market. So I, being a swing trader, first and foremost, I like to see the trend. Where there is no trend, I'm not interested. In a strong trend, I like to see a counter move. Over here, I would like to go short in the derivatives market. This is swing trading. All right. Ishan is asking how much capital for options trading. Options trading, if you're a buyer, all that you need to do is pay the premium multiplied by the lot size, right? I can say as small as 50K to 1 lakh at a very elementary newcomer beginner level, one can start with even that kind of money. But having said that, please understand, trading investments is about 3 M's. Method, money, and mind. So if you think that if you get the money and you know a little bit of method, you will make a lot of money out of it, it doesn't work that way. It's a nice mixture of these 3 things. So before you get into, okay, 50 grand, I have 50,000, from tomorrow I'll start doing options. it's not going to work. You need to know the method also.
Rupa wants to know, can you please explain about BTST? What is cash futures options?
Okay, Rupa, you want to know about BTST, buy today, sell tomorrow. Now, BTST is a specific type of recommendations which many advisors share. It means that generally after 3:15 or 3 o'clock, towards the last end of the market, we or few advisors or you would like to buy into some stocks which you feel, which you sense that tomorrow it's going to go up at the opening. So you buy today at the last minute or the last hour, and you sell tomorrow at the opening. So buy today, sell tomorrow. The other side of BTST is called STBT. You short or you sell today at the closing and you buy tomorrow at the opening. It is a trade which is very short term in nature, ideally done in the futures market because you will not do it in the cash market to pay so much high brokerage, right? Futures and options is a part of the derivatives market. It's fairly vast. Fairly fast.
So,
yeah, so more or less.
I take it from you.
Yeah, okay, 1 minute.
I can continue your place on.
Yeah, you can continue here as well.
So hopefully we were able to answer your questions. Now there's a good news for all of you. Like what has been decided by Education Lane Tech Mahindra is to give you some kind of freebies for today. So there were questions about SEMA course fees and all, which we did not take up. So because we wanted to answer it at the end. Now the program fees for SEMA is 40,000 rupees plus GST. It's around a 4 months program. But today, since we are having this webinar, anyone of you who is registering for the program by paying rupees 1,000 will straight away get rupees 5,000 as a discount on the program fees. So only for today, those who are registering for the program paying 1,000 will, for them the course will reduce from 40,000 to 35,000. And the remaining payment has to be made within 20th September. And not only this, you will also get free lifetime access to all the live webinars and workshops which Tech Mahindra Education Lanes is going to conduct here on. So any one of you is interested, you can, the link will be shared with all of you and you can probably register. This 1,000 is non-refundable, but then you get 5,000 straight away off from the course fees and also free lifetime access to all the live webinars and workshops of Education Lanes. So that's all from our side. I hope you had who enjoyed the session. We just gave you a small insight of the program. Definitely in 45 minutes, 1 hour, an elaborate version was not possible. It's a 4 to 6 months program. So if you join, yeah, like we had excellent feedback from the last batches for the last 3 years. If you join, I'm sure that you are going to have a very good feedback about the program. And as I told you, the end objective of the program is that once you complete the program, you should yourself be able to trade or invest in the stock market as well as in mutual funds. Or if you want to get into the financial markets, get an employment, or you want to change your current employment and get into financial markets, this program will definitely help you in that as well. So thanks a lot from our side, from mine and Abhijeet's side, and hope you have a great evening ahead.
All right, thank you everyone for listening it out. Thanks a lot and hope to see you a part of SEMA. Thank you, take care.